This video will help you understand how to use my amortization calculator and loan comparison tool. You can download a copy of this tool with the link in the description. I created this tool to help homeowners that might be refinancing their loan or potential home buyers understand how different scenarios impact their monthly payments and understand how different scenarios may cost or save them. Consumers can utilize this tool to get the information that they need to compare different options and make the decision that makes the most sense for them. Quick disclaimer here, all the numbers I'm going to go over in this video are for example purposes only. They are not an offer of rates or terms. If you do want a rate quote, you can get one from a licensed loan officer. I'm going to go over the features this calculator has as well as how you can use it. Here's what this calculator can do. It can show you what your down payment will look like based on a purchase price. It can show you what your monthly payment will look like based on a specific interest rate and loan term. It can show you how much interest you'll pay over the life of your loan. It will show you how much making an extra monthly payment will save you on interest and the loan term over the life of your loan. And it'll also show you a comparison between different loan options. So I'll go through each of these features with you as well as different scenarios to show you how you can really dig into some numbers. We're going to start with this box up here and work our way down. This is a good place to start with the purchase price since that's what most buyers start with when they want to figure out what their budget is and what their monthly payment's going to look like. So with a $450,000 purchase price, here we'll move down to the down payment percentage. And 3.5% is the minimum down payment required for an FHA loan. For first-time buyers, you can go down to 3% on a conventional loan. And you can always plug in different numbers here if you want to see the impact, but it will spit out what the dollar amount is based on your purchase price and the down payment percentage. So 3.5% of $450,000 is going to be $15,750. So you can see here if you plug in 5%, that bumps it up to $22,500. This loan amount box here you shouldn't have to mess with, and that is because it's automatically calculated based off of your purchase price and your down payment dollar amount. So this will be automatically calculated taking your purchase price and subtracting your down payment amount. This next box is your loan term in months. So standard 30-year fixed mortgage is 360 months. For first-time home buyers, I don't usually advise to go lower than that just because you lose out on the flexibility that a 30-year term offers. With a 30-year fixed, you can always make extra payments if you want to get aggressive to pay down your loan faster or if you want to save money on interest. You can always make an extra monthly payment. But if you end up getting a 15 or 20-year fixed, you're stuck with that higher payment and you don't have as much flexibility versus the 30-year fixed, you're not obligated at that higher payment. This box here is just your interest rate, so we're going to go with 6.5%. And this will spit out your monthly payment based on the terms you plug in here. So this is just your principal and interest, so keep that in mind. So in this scenario, it's going to be $2,744.76. It is not including any of your property expenses, which will be likely in your mortgage payment if you have those escrowed. And that's going to be your property taxes, your homeowner's insurance, your mortgage insurance, and any HOA dues. So keep that in mind depending on where you purchase your home, the lender you pick, your credit, and your rate that you get for your mortgage insurance. That's all going to be added on top of this payment here, but this is a good place to start. Next box down here, this is where the numbers get interesting. So you can plug in some numbers to see how much an extra monthly payment will save you on interest. So say you put $100 here, you make an extra $100 a month payment on top of your scheduled payment here. And that will show you that you will save 35 months on your loan term. So you'll pay it off 35 months sooner. And you'll save $64,652.57 in interest. So that's kind of cool to look at and see the impact. I'm going to put this back to 0 because I want to show you the amortization portion of this calculator. So the amortization schedule will show you how your payments play out over the life of the loan. So if you see here, it goes all the way down to 360 months. And this will change based on the loan term you put in. And it'll also change if you plug that $100 back in. It'll show you how much sooner you'll pay off your loan. It'll update the payment schedule. So it's kind of cool to look at that. But what's interesting to note for mortgage payments, beginning of your loan, you're going to be paying more towards your interest than you do towards your principal. And every month as you progress, you're going to be paying more and more towards your principal and less towards interest. So here, your first month, you pay $392.57. The second month, you're going to be paying $394.69. So the longer you stay in the home, the more and more impact your monthly payments have on the equity you have in the home. So you're going to be gaining equity faster the longer you stay in the home, which is a cool feature. Now I'm going to go over a scenario that I go over with a lot of my buyers because they usually come to me and ask a question about their down payment and how it affects their monthly payment. So a lot of times they'll come to me and say, what does my payment look like if I put 10% down instead of 3.5? And they're usually asking me this because they want to know, or they're trying to lower this payment as much as possible, and they want to know how that affects that and different ways that they can lower their payment. So we can definitely take a look at those numbers. We can move this up to 10%. But what I often end up going over with them is the way you can utilize seller credits to do an interest rate buy down to lower their monthly payment. And that's usually a faster and more effective way to do so. But I'll show you both options. So if you put 10% down, that raises your down payment to $45,000, which is an extra $29,250 compared to the 3.5% down. So you're an extra $29,250 out of pocket, and your monthly payment savings is going to be $184.88 per month. So it's not a huge difference for an extra $29,000. So not a huge impact. Versus if you instead stuck with your 3.5% down payment, and let's say you get a seller credit of $10,000 and you can utilize that for a rate buy down to 5.5%. Let's take a look at the impact there. So if you do that, you're actually going to save $279.14 versus $184.88. So definitely a bigger impact, and it's a seller credit, so it's money that's not coming out of your pocket. So that might be a better option for you. Now, that might not be an option for everybody. You might not be able to get a seller credit depending on the market you're in. And there are other reasons why you might want to make a larger down payment, but it is something to consider, and definitely keep that in mind and ask your real estate agent if that's an option for you, because it can be really effective if your goal is to lower your monthly payment as much as possible. Now, some other reasons you might want to put a larger down payment would be mortgage insurance, for example. Mortgage insurance is dependent on how much you put down, as well as your credit score, your income, and the lender you pick. But oftentimes, if you put a higher down payment down, you're going to have a lower monthly mortgage insurance rate. So that's something that you might want to consider. And if you put 20% down on a conventional, you can avoid mortgage insurance completely. So that might be something you want to do. But typically, anytime you put a larger down payment, it's going to improve not only the interest rate pricing on your loan, but also the mortgage insurance rate on the loan as well. So definitely something to consider if you do want to put more of a down payment down. So you might be wondering what this box is here, and I am going to show you what this can do. So this was the box we were playing with before, but here you can put a second loan option to compare side by side. So let's say you're not going with the seller credit, you're not doing a buy down, but you are shopping interest rates, and there is a lender that will offer 6.25 versus 6.5. So you have one lender here at 6.5, one at 6.25. This will automatically show you how much you're saving for your monthly payment. So this option will save you $71 per month. And over the life of the loan, you'll save $25,561.24 in interest. So that's an important number to look at as well. So you can take a look at different loan options and see how that impacts your monthly payment and your interest savings. Now this box down here shows you your interest savings with extra payments. So if you were to plug in an extra payment amount here, you'll see actually this would save you more money with 6.5 and an extra $100 a month payment compared to this option here, which is interesting to see. But if you had $100 on each option, that'll show you that in that case, it would only save you $21,320.58 in interest. And that's just because this is a higher interest rate, and this extra monthly payment will have more of an impact on this loan than it will on this one because it has a lower interest rate. So that's just kind of how that works out. But you can definitely compare loan options. You can even put different purchase prices. If it's a higher purchase price, this number is going to be red because it'll show that this is a higher monthly payment. But this is just a really cool comparison tool, especially when you're shopping and you're thinking about two different options and what makes the most sense. Again, if you want to download this tool, you can do so with the link in the description. Thanks for watching. I hope this was helpful for you in your home buying or refinancing journey. If you want to learn more about the home buying process, you can download my free Home Buying 101 workbook with the link in the description. And if you like this video, please like, subscribe, and ring that bell.